Good morning, Namaskar. I am Divakar. Welcome to the live session of Bulls and Bear Bulletin. Today is 30th May 2025 and the time is 9:19 a.m. The market just opened a couple of minutes ago and indicating there is a small gap up and gap down happening there. So before we go and explore trades, let me just brief you on the topics which I'm going to discuss today. Number one, I'll begin with Nifty and Bank Nifty technicals, which are important to know before we take any trade. And number two, global market scenario, which is useful to know and scale how it can impact on the Indian market today. And thirdly, I'll be talking on the important indicator moving average, which is very, very crucial for my reference in taking any trade and how it can actually give me the uh, positions on the stock or index. So the next would be option chain where we get to know the support and the resistance levels, and then I'll explore trading opportunities. By this time it will be 9:25, 9:30, and I'll continue discussing on two of my favorite strategies, bull spread and iron condor. And today's additional topic would be understanding the technical analysis for beginners. So if you're a beginner, the question comes, how do I go technically sound to understand before I take any trade? So I'll discuss on all this. So meanwhile, I request you to subscribe to my channel if you're not yet subscribed and like my channel. So let's straight away go to the Nifty technicals first. I'll be brief today because the market has opened, so we need to explore the trade, and it's 9:20 now. So all I need to tell you at this moment is Nifty made a high in the last week of September on 26 around the 26,300 level, and from there we saw the declining up to the level of 21,700, losing about 4,300, 500 points, or you can say 15% correction. From there, you can see the market has bounced back and trying to cross the important levels of 25,000, just 1,000 points away from the all-time high once again. So the market is showing all good strength in moving up. The volatility is there, so there is a kind of a range bound trading happening for the last couple of days, around 500 points between 24,500 to 25,000 or so. So you can see RSI still intact, trading around 5760. However, MACD is showing some kind of a weakness, and that's probably understandable in this volatility. So let's go straight away on the broader market scenario and understand where things are looking. So you can see there are 2,300 stocks being traded as of now, where 1,300 stocks are advancing and 975 stocks are declining. So there is a edge from the bulls here. So currently it's showing some good strength. Sentiment is strong, but I would like to check often here, say in, every half hour or so, and understand where things are going. And let me go to the option chain now and see how things are looking. The Nifty is at 24,839, and if you can see here, 24,850 is having 21 lakh call open interest on the left side you can see, and on the right side you can see the put open interest is at 15.8 lakh. So it suggests there is a resistance, and 24,900 is having 31 versus 16, and 25,000 is having 67 lakh call open interest versus 22. So a strong resistance at 25, and hurdle is there at every 50 point, and at the same time if you come down there is a good support you can see at 24,750, 24,700 and so on. And the strength you can see highest at probably 24,500 at 35 lakh versus 6 lakh, and also 24,600 is having good strength at 22 lakh versus 4.7 lakh. So more or less, right now the nearest support is 24,700, and upper you can see 24,900 is the resistance. So we are in between. So let's see how market goes. Today is the new month series, and the first weekly expiry on the June is on 5th of June. So usually in the first week of the month, or especially the first day of the month series, there will be a trending moment. Let's see whether it's going to go up today or come down. So let me just change this to a smaller time frame, a minute or so. You can see it went down up to 24,780 level and recovered, and so somewhere here now. I would like to see at least 24,900 for the market to cross to get some kind of a confirmation. uh, so 24,850 is having a 23 lakh upper call open interest, 23 lakh versus 18 lakh. So there is a resistance here, and if it crosses, then 24,900 becomes an important level to watch out for. If it crosses, then it can be a bullish. So right now, it's a flat market, very tough to analyze the trend, and Nifty Bank is also not showing much movement. You can see it's somewhere there, just about 50, 100 points gain. So we had a range bound based trades taken yesterday and day before were very successful, and I'll not be very keen on taking a range bound trade, especially on the bank nifty being a new month series, which will have only the higher premiums now. So, and beginning of the month, the theta decay will be very less. So it should be a directional trade if we are taking anything on bank nifty. And of course, nifty, we can look at both option, whether we should trade on the upper side or on the lower side. So strength is getting built up. So meanwhile, what we can do is until the trade comes, so probably I'll be looking at least closer to 24,800 to take a bullish trade, because it's showing some strength now. So it made a high of about 24,860, and at least closer to 24,800 we can look for some bullish trade. So meanwhile, let me go to the next topic, the global market scenario and how it can impact today. To begin with the US, you see the S&P 500 is having a 0.4% gain, and the Nasdaq, the tech index is 0.21% gain. You can see at a flat market. And if you go to the UK, the FTSE 100 index is minus 0.11%. You can say it's a flat market. So coming to the Asian market, Japan 225 index is minus 1.36%. So I was explaining, so in the Japan 225 index, anything above 1% on the gain or losing is something big. And if you come to Chinese market, the SSC composite index is flat at minus 0.31%. So except the Japanese market, overall picture is okay, may not be very influential today for the Indian market. So let me just go and see whether we are getting any opportunity here. So looks like it's going to be nearing 24,800 level. So let's go to the next topic and come back to exploring trade, and the important indicator which we refer for trading is moving average. So what is a moving average? A moving average is nothing but for a particular period, like 10 days, you take the average price on based on the closing price of the stock. So it will help you in understanding how the stock is moving, and based on that you can take a trade. So there are different popular moving averages, not just the 10-day. So they are the 20-day, 50-day, 100 and 200-day moving averages. So these are all represented on this chart by different colored lines, and amongst this the most important is the 200-day moving average. So it is considered, if a stock is trading above this, it's considered as strong or bullish, and if a stock is trading below this, it's considered as bearish or weak. So you can see on the index, that is Nifty, when it started declining, it broke the 200-day moving average, and then went down, breaking other moving averages also. So it was showing all the weakness here and went down, and again it regained, started picking up, crossed the 200-day once again, and it's showing some strength in going up further. So that's how you analyze a stock and take a trade. And it looks very simple. So if a stock is crossing this, you can just buy it, and if a stock is crossing below, you can exit. So it's as simple as that. Of course, by not making extreme complicated, in fact the trade works really fine. However, there are other supporting moving averages where you can use it for the kind of trade which you take, whether it's intraday or the short term or the long term. So based on that, you can use this. It's pretty useful, and we'll continue discussing this in the session. So uh, I request you to subscribe and like my channel if you're not yet on this context. So the Nifty again made a low around 24,830 and again went up. So I'm not so keen at this moment to take any trade because it's kind of in between. So either I'll wait for it to come down towards 24,800 level and show some strength again, then I'll be looking for a bullish trade. Or if it starts breaking 24,800, then I'll wait whether it goes much below than 24,700 to look for bearish trade. So because we are seeing the market being extreme volatile and on the same range, there is no point in exploring a trade immediately. So we'll wait for that. Many times a no trade is also a big trade. So We made good profits in the last several sessions, so we should definitely try to preserve that by unnecessarily not going aggressively when we are not sure on the market direction or how it's happening. So, meanwhile, I did mention about the topics which we are discussing today. We have covered the Nifty and Bank Nifty technicals and the global market scenario, moving average, and option chain. Option chain again, it's very important to know the support level, and it helps in understanding how the market is moving. It works the best on the normal days, not on the extreme aggressive conditions. So you can see here, the based on the option open interest built up, we can make out 24,700 is having a good support on the downside, and 24,900 is having a resistance on the upside. So based on that, as I said, we can actually take a range bound trade. So basically, the theta decay on the first day of the weekly expiry would be less, so I generally avoid, and more interested in a directional trade. We So the immediate support is at 24,700, then 600 and 500, and resistance is at 24,900 and 25,000. So it needs to cross one of these to give a perhaps a good directional view. If we are quick enough to execute a trade, we can look for some profits in that point. Now, so I'm going to wait until the market gives a good direction, as it's on the same range for the last few days. So then explore for the trade. So meanwhile, friends, I would like to give my disclaimer here. The live session which I'm doing is purely for the purpose of education and information. So if I'm taking a trade, it's going to be a demo trade only. So please do not copy it. And if you're doing it, you are doing it on your own risk. Please consult your financial advisor before you take any trade. So the next topic on the list is bull spread and iron condor strategy, which I'll be explaining as and when we are taking trade. However, bull spread is nothing but you buy a call on the spot, which is closer to the spot, an ATM call, and sell a call couple of hundred points away from the spot. So if you are buying a 24,800 call now, the spot being 24,800 is the one nearby, then you sell at 25,200 or 2,500, 300 points away, call, that becomes a bull spread. This is this works well when we have a bullish view, and at the same time the opposite of buying a put and selling a put will become the bear spread. When we are bearish, we can execute bear spread. When we are bullish, we can execute bull spread. Iron condor is nothing but when we have a view on the range bound of the market, that it's in the same range, like I was explaining last 2 days. So we had a range bound trade and took the advantage on the theta decay. So selling a call away from the spot and selling a put away from the spot, making keeping the equal distance becomes the strangle, and then again buying a call and put further away from those sold call will become iron condor. So this is more safer strategy than the short strangle. People just sell, and you need to have a lot of control over the situation and experience. So the best would be to go with iron condor, according to me. And as and when we take a trade on the situation basis, I will explain in detail. Now, today we need to understand the technical aspect of it. So, a lot of people ask me as a beginner how much technically we should know before we start taking trade. So this is like graduation in the university. You cannot learn everything over a single day. So you just begin first and start learning in course of time, maybe 6 months, 1 year, 2 year, 3 years, based on the kind of number of trades which you take, and the experience will give you fantastic knowledge. And that's how it is. Actually, there are a lot of probabilities which come. What you will think, this is how it works the market, but there'll be another thing which comes and disappoints you. So to avoid that, you need to learn a lot of different views and strategies. So understanding technical analysis. So today we are flooded with plenty of indicators, and so meanwhile, let me just quickly go and check. So 24,800 is so yesterday's close is 2483. It's below that 24,800. Let me just go again and see. You can see the difference between the call and put is not much. Even the call side, you can see there is an increase. So the market needs to again give me some more. Well, we can probably attempt one bull spread and keep a very strict stop loss. So let's create a basket first. So today is 30th May, and what we need to do is buy a 24,800 5th June call at 231, sell 2,500 call, trading at around 100 level. So you can see the margin is just about 46,000, and the rule is you need to trade with a minimum of 2 lots. So let's analyze this. So if we are going to go towards 2460 or so, you are looking at something almost 1,000 kind of a profit per lot. So what we need to do is book around 500 rupees on the first lot as soon as we reach there, and carry on with the trailing stop loss with the remaining lot until the market is supporting us, or if it hits the stop loss, that's okay. So and so bull spread, buy a call 24,800 and sell a call 2,500. So you can see I bought closer to spot. Okay, so closer to the spot we should buy a call, and then it is like a OTM, what we out of the money. So away from the spot is 2,500, and it can be, there is no rule. If you sell 24,900 also, it becomes a bull spread, or 25,000, 2,500. So as long as you are keeping away from the spot, the sold call, that becomes a bull spread. So the questions come then, which is the best? When the premiums are high, you can afford to move the sold call at a distance. Otherwise, you'll not gain much. It is more safer to keep closer, but what will happen is the profit also comes down. So you keep the distance longer, the risk is higher, and the profit is also higher. So we need to be in between. So we should not sell like 25,500 and have a higher probability of profit, but what will happen, the risk is also high. So I generally go with when we sell a 250 rupee, buy a 250 worth call, I'll keep about one third of it, say about 100 or 80 rupees worth call to be sold. That's what we did today. So here what we do is, the first is stop loss we should keep at minimum, as minimum as possible, so 500 to 800 rupees. And the rule is trade with minimum 2 lots. Why? Because when there is a volatility, if you are trading with just one lot and having a target of 1000 rupees, what will happen is you're seeing the profit coming up 100, 200, 500, 600, but your target is still 1000, so you don't exit and the market reverses. What will happen? The profit which you see 600 is also gone. Now, to come out with a solution for this kind of a volatility, what we need to do is, when we trade with multiple lots, more than two, the advantage is as soon as you see some respectable profit, 300, 500, you exit 50% of your lots. So you are assured of that kind of a profit, and then you continue keeping a trailing stop loss. So exit first lot or 50% of lots at say about 500 profit. It can be 400 or 300 also, and exit second lot or the remaining lot, keeping a trail stop to begin with 200 and then 300, and you can increase it. If the market is reversing, then it will hit the stop loss, no problem, you will still be under profit. Believe me, in the month long trading of 20 25 day trading days, you will be making very good profit, and also the return on investment will be justified. Let's not have unnecessarily very high targets. If the market is giving, let's take it. So the trailing stop loss works best. If the market, in spite of analyzing, like today showed about 1000 rupees profit for the target which I showed, but if the market crosses 25, 200, 300 aggressively, you will make good money on the remaining lots. So no problem. So continue the trailing stop loss and take it as much as possible. If the market reverses, the stop loss will be hit, no problem. So that's how we keep it. There are plenty of times we'll get to know how this work. So once again, let's see where we are standing in the market today. So it's just come down to 24,800 level. So it's not working out much. It's still on the volatility of 1050 points, so we will be under some kind of a pressure. So you can see around 130 kind of a loss is there right now. So 500 is the stop loss. So you can exit at about 24,850 level, not even 24,850 level, 24,840 or 835. You will get the 400 500 mark. So you should exit the 50% of lot here. So that's the best thing to work. Now let me go to the next topic, understanding technical analysis for beginners. So how much it's important to know technical things. How do we the technical analysis as a beginner? So we'll not go with too much of indicator learning or trying to scratch our head on those things. So the moving average which I explained definitely is part of this. You can combine this for today's thing, today's additional topic as a beginner, how much it's useful. So whatever I mentioned on the moving average, understanding how many moving averages are there, and then taking a trade based on the breaking of the 200-day moving average is good enough as a beginner to go with that kind of a technical. Whereas the advanced stage would be, as I was mentioning, how to use the other moving averages. So what are the different situations which come, which makes it complicated? I will explain in course of time, and also with your experience, more and more number of trading using that basics of the moving average which I mentioned is good enough to which will help you to learn more also. So go with the basic one, popular one, moving average. And in the moving average, as I mentioned, keep the 10, 50, 100 and 200-day moving averages in your list. So take a trade if you are trying to use a stock and trade for long term, then use the 200-day moving average. And you can see the 50-day moving average if we are looking at short term target. And if you are keen on doing the intraday, go with the 10-day moving average. So that's how it works. So see whether your stock or index is crossing above or below. um, Market opens at 9:15, the stock might be below the line. That doesn't mean that you should sell it now because it's already down. So now the next opportunity is you should wait for the market to cross this and come up. Whether it takes 1 day or 5 days or 10 days, doesn't matter. You should wait for it to cross the line. So when it's going up, and then that is the time you buy. When it's coming down, you should sell it or exit. So we should keep in watch list. That's why watch lists are there in our account. So keep a couple of interested stocks of yours and the index and see how things are. Do a paper trading or so in the beginning, or if you already have some experience, just implement this in your trade on a daily basis. It will work very well. So moving average is the one and the only one which I recommend. And there are other popular one. I use even RSI, which relative strength index is also very good. In the RSI, you can keep it as 50 mark. So like moving average, if the stock is going above 50, you can consider it is becoming strong or bullish, and then take a buying trade, bullish trade. At the same time, if it's going below the 50 mark, you can look at selling the trade. Well, there are other case scenarios in this 50 mark. It has a range of 0 to 100, and in fact, at 20 level, you can buy. Though I have sold under 50, you need to sell. But when it starts coming down towards the 20, actually the indicator says when it is 20 it's oversold, so you can buy. So this is slightly advanced. Let's on the first stage only follow the 50 mark, going up 50 mark buy, below 50 mark sell. So you should not try to chase when you are looking at a stock which is already 60 65 to buy, and you could just know that it is strong and then come back to the moving average indicator and use that. So using just a combination of these two would give you much more than what's needed. So there are plenty of indicators. If you are taking or trying to study too many indicators, it may spoil the spirit. So friends, I'll continue discussing on this. So I hope you liked it, and please post your comments on my YouTube channel or on my Twitter account. And if you're not subscribed, I request you on this context to subscribe my channel also. So you can post your comments or doubts on the YouTube channel comment section or on my Twitter account at BNBBULLETIN. I'll be happy to answer. Meanwhile, the live session which I'm doing is purely for the purpose of education and information only. As of now, the strength is still there. You can see it's holding on to this level, means right now it's keeping it that way. But let's check once again the broader market, how things are looking. The time is now almost 10 o'clock. Well, see, now it is reversed. When we saw half hour ago, the advances number were more, like 1,300 and 900 was the decline number. Now it is more with the decline 1,355 versus 1,124. The market sentiment from the opening after 1 hour or 45 minutes, it's turned from positive to negative now. So when you are aggressive intraday trader, these information help. And if the difference is small, I generally take it as volatility based movements, and only if the difference starts becoming wider and wider, then I will look for changing even my trade. So the broader market picture versus the Nifty index will vary. However, as I said, if the difference between the advanced number and the decline number becomes more wider, then it's a worrying factor even for the index. Well, friends, it's time for me to take a break and I'll come back soon. So, meanwhile, the live session continues. So, please continue watching. And however, I thank you for joining the live session and request you to join every day at 9 in the morning. And also subscribe to my channel if you're not yet subscribed. And if you have any questions, you can post it on my YouTube channel comment section. I'll be happy to answer. So I'll see you again. Take care. Bye bye.